Okay, it's Wednesday night, the 27th, taking a look at the S&P 500 for Thursday, the 28th. This is a follow-up to a video that I posted over the weekend, and this is a simplified version of the S&P 500 chart that I used in that video. Following up on the notes from that video, if the selling continues, we will have a 10-day cross down through the 20-day by Wednesday, and sure enough, that's what we had this morning. We opened with a 10-day crossing down through the 20-day simple moving average, and we wound up having once there was some like chop and some head fake going on in the morning, we wound up going into a trend day where we pushed on down to a low, closing on the low of the day, below the 100-day simple moving average and below the 2700 handle. So not only did we close below the 50, but we closed below the 100-day. Last week, this is going into this second note here that was on this chart. Last week, we had seen a whole week of trading below the 10-day simple moving average. And then on Thursday and Friday, we got the added insult of closing below the 20-day and followed through with that on Friday. And that ended up, leading us down the garden path to opening up on a gap down on Monday and having this sell-off. But at least on Monday, they managed to reel things back up and close back above the 50 and the 100-day. On Tuesday, we had an inside day that really never violated the 50-day simple moving average. And then, of course, you have today. And when you kind of look at it, it almost looks as if today's candle is split in half by the 50-day simple moving average. So that just goes to show you how important it is when that goes down, that we could double our losses on a day when that happens. And you can even see over here on Monday, it really looked like the loss of the 50-day sort of like almost doubled the losses on the day from there. So keep that in mind tomorrow. If we rally back on up to the 50-day simple moving average and take it out, we could double up our gains on the day. So it works both ways with that. It's a really important key level that a lot of traders watch. So keep it in mind. And if you take a trade tomorrow where you're waiting to see a failure at the 50-day and you get into some puts, but it starts like going against you up too far up above this 50-day, you want to be careful because you could be looking at a double up on the range for the day from there. Let's talk about what's going on here with this 100-day simple moving average and what's going to follow through if we fall lower. I introduced this idea of hitting 2670, 264 last week on that video. That will be the halfway back for the quarter, from the 2553 low that we struck on the very first trading day of the quarter to the high that we made in June week 3 up at 2791. Halfway back point for that ends up being 2672.74, and coincidentally, that is right where the 50-day simple moving average was when it finally flattened out and began to tick up. And back when that happened, that's when this whole leg of the whole June leg of the rally began. So kind of interesting that maybe we might retrace back to that perhaps tomorrow, if not into Friday. Now tomorrow we have the CCAR results after the bell, and it just goes to logic that we would probably have some kind of short covering rally during the day tomorrow to just prepare for the possible positive divergence on everything, positive reaction to everything on Friday after those results are out. So if we are going to push lower tomorrow, ultimately a great setup would be is if we finally just push down to this 2672 level down here in this area. That means we would have retraced back half of the whole quarter, tested and held above the 200-day simple moving average, and then we can work our way up from there. I'm not saying that would be the end of everything. We could rally then for a couple of weeks only to come back down here and break these levels later on. But I'm thinking just in the terms of what's going to get us through Thursday, Friday, and maybe into the first couple trading days of next week. That's all I'm thinking about. I'm not thinking about what's going to be happening at the end of July or anything like that. When I'm talking on these videos and stuff, I'm really talking about tomorrow, the next day, maybe a week out at the most, but that's about it. Okay, anyway, if we do break below this 2672 level, we have the 200-day simple moving average, and we have This interesting little level over here, if you look to the left, this is a level that came about during the very first leg of the rally in May. When this rally first began, we pushed down to 25.94 on a Thursday. We came in on Friday and held the 200-day simple moving average. We had Warren Buffett on the air talking about his big amassed fortune of Apple stock, and the market rallied on out, and we had a huge trend day that day, taking back both the 10 and the 20-day simple moving average. And then when we got to the next week, to Monday and Tuesday, we had a couple of these sort of like compacted sort of inside days. And uh, that second day after this 2-day run here on Tuesday, we back tested down to the 10-day simple moving average, and we set this low at 26.55. Now that's about 100 points off of our gap that of where we closed last week. So I'm thinking that, that could also be something that the market is looking for. Maybe they're looking for something as ridiculous as a 100-point difference between where we closed on Friday to where we bottomed out the following week. So I will make sure and mark this one off on the roadmap, the main roadmap. But in any case, I just wanted to go back and revisit this stuff that was talked about in the video last weekend, and to just reiterate that these levels seem to be coming along well. And of course, if I'm wrong about this 26.72 level down here, then by all means, we know what needs to be done. We need to take out and hold the 100-day. We need to take back and hold the 50-day. Intraday, above the 50-day, we have an intraday level. In fact, let me see if I can get the roadmap up here. Okay, yeah. Intraday, we have a level at 27.28. That was a bounce high during the day on Monday. On Tuesday, we sort of consolidated intraday and made a flat there. And then today, on Wednesday, we opened on this 27.28 handle. So once we get above the 50-day simple moving average, that's the level that needs to get taken out and held for confirmation above there. And then above 27.28, we just start, the grind back towards 27.42. And 27.42, I don't need to go over that again. I've mentioned it at least 100 times. You guys know what 27.42 is. Well, today's high at 27.46 was just a little look above that level, and it failed. And it looks to me like the 10-day simple moving average is probably going to come down and be right at that 27.42 level tomorrow. Close today at 27.51, and it's probably like moving at a. It's not letting me like check the reading right now. Okay, wait. Yeah, 27.51 yesterday, and it was at 27.58, 59 yesterday. So it moved 8 points from yesterday to today. If it moved that same amount of points, once again, we'd have something around 27.43. It's 27.44. Okay, so that's really going to be, a line in the sand to draw up above us. If it happens tomorrow, if we rally back that high tomorrow. This 10-day simple moving average is going to come down even lower on Friday. So if we don't have that much of a rally tomorrow, a short covering rally ahead of CCAR, but say we close maybe above the 50-day simple moving average, something like that, I could see us maybe coming in on Friday and having one of these kind of days where we blast on through and retake both the 10 and the 20-day and finish the week back at the scene of crime, back where it first started out, and being up at the 27.50s to 27.60 level to end the week. Okay, so just some things to keep in mind. The simple moving averages are your friend and your guide right now. So get your daily chart out and have those on there. If you use Thinkorswim, let me know, and I'll give you share links to that simpler chart, and as well as the main roadmap chart if you'd like to have them for yourself. Anyway, have a great rest of your evening. Good luck and good trading.